Hey, thanks everybody. Let's get started for today. As always, the Mad Caps with the Cat Burglar. So, a lot to get into. Let's not really waste any time. Really quick, want to just kind of bring up the disclaimer and a couple of informational updates. So, here's your risk disclaimer. We are reviewing harmonic pattern measurements, looking at various markets for educational purposes and that are entertainment purposes that I hope you find educational. Now, maybe Bitcoin's not too entertaining today, but tomorrow is going to be really good. Tomorrow, folks, we've got the one and only Mitch Ray TA. Mitch Ray doing fantastic work over at his channel. Check out Mitch Ray TA. So Mitch and I are going to get into it tomorrow. We're going to have a lengthy discussion about what the heck is going on. So I look forward to that. Mitch has really become a friend of mine. I consider a good friend, and been his crew and the people there. You guys are fantastic. I met a lot of those people at the Bitcoin conference, and really want to support people like Mitch who are doing just top level technical analysis. And he's there 6 days a week, a lot of times 7 days a week. So, what he provides is, and if you want to learn technicals and all of that, I strongly suggest to check him out. Now, let's get to it, because we'll talk about a lot of things tomorrow with him. And Mitch has definitely he's got a lot of different modalities he brings into his analysis, and I think he does a lot of harmonic features, but he does great overall integration. So we're going to bounce ideas off, and we'll be here tomorrow 11 a.m. So what are we going to do, folks? What are we going to do with this crypto market, right? Do our concerns continue to increase? Not to mention, markets are down. Nasdaq's down, was down 100 and change. Last week's been pretty volatile. We will look at probably some of those markets tomorrow and do more of a broader analysis. Today, I want to just go through the crypto and get a quick update on what we need to be thinking about here. Because the measurements, the metrics, and everything we talked about last week, the test down at 42K, depending on what your exchange you were on. There you go. That's a better chart. There's USD. We're still dealing with the shark, right? Remember, shark to flow? Shark to flow is alive and well, folks. Just don't want to get bitten too bad by the shark and not have this puppy work out. There's your 886. It was, just about as exact as you can be for a shark pattern. 42.9, 42.5. The thing we have now that we did not have really was last week was the check back, our daily confirmation that had really developed a few days later, and now we have 2 HSI signals. Looks like this. So our indicator, HSI, decided to spend quite a bit of time to spend the weekend in the oversold zone. That's not something I like to see personally. I mean, I really want to, when I see an HSI confirmation, I want the pivot, maybe a little check back, and then go. The final piece, and this is something for harmonic pattern collection software users to think about, is that usually when we get that first HSI signal, yes, we can expect a little retest, a check back. But we get a second corresponding signal, as we see here, that pretty much cinches up the whole area. So we have 2 HSI arrows. You should be seeing response rate fairly significantly quickly. That's what in terms of our oversold indicators, some of the things we were trying to discuss last week of, confirming that washout that happened, now we have it. And I'm absolutely not really enthralled by the action. The shark should be a lot more responsive than it is. And finally, we should see this thing at a minimum on this move come up to that 56. What's that 56,000? It's the shark turning into a 5-0, kind of like this. And that's what we talked about Thursday. Your minimum 50% level is about 56,000. We didn't get up there. It should have. I really felt like we would get there. Maybe work through some consolidation. There's one other thing I do want to kind of feature as a part of the 5-0 pattern that we frequently see that might explain this current consolidation is a simple fact that it is common to get ABCD structures. A smaller ABCD, like you get like that. Actually, I'll use the TradingView manual tool. They have a manual XABCD tool and your manual ABCD. So what we see, it's common, and this helps to kind of clarify the situation currently, is you get an A, B, and then the CD, something like that. It should be more like that's about right, up into that 50 level. So for what it's worth, I talked about that last week. I even showed the volume 2 book. Again, all the books available on Harmonic Trader, and I'll pop up that illustration in a second. But that could explain some of the consolidation, but it would not explain a violation under 46,000. Really, I would say under 46, we reset, and it's just gonna take more time. We've got Bitcoin down 5+% today. The bigger concern now that I want to watch is Ethereum. So Ethereum sitting at that high level move. Let's go to the 4-hour chart. There you go. We had this big crab, and down at that hop level, 37.63. Look, we came back again, and these are just yielding dud reactions. Reaction to target 1. Reaction to target 1 again. Oh, why doesn't that stay on? Like this. How many of these have we seen? A lot. That one. And then another one. And then maybe one more? Well, it's very possible. But I would not expect anything more than a reaction. And we are getting to the point where the series of this inability to break above our target 2. Okay, there's the target 1 up. That's the official type 1 reaction. Come back down. That's the official type 2 reversal. Because why? It goes to target 2. That's how we play that out. But we get a third test, and I talked about that last week of why, okay, maybe we get a hop test that could give you a reaction. But there's no demonstrative continuation occurring off this. And for Ethereum to break under this 3,700 area is real trouble. We do have some confirmation here. You have a few oversold readings hitting this zone, but what's the problem? The problem is it's losing its integrity. The pattern is simply losing its integrity. Integrity, for those that know what integrity is, it's a joke, but it's losing its integrity. The longer you go sideways, multiple reactions, no follow through, That's the sign of a failed pattern. What do you do with that? Wait for the next pattern, bullish pattern, if you get one, or go to the daily. This is my real issue with Ethereum. Much like what we saw on Bitcoin, and I will still stick to that with the Bitcoin larger scenario. Let me clean up this chart, but we can move up the whole scenario for Ethereum. Basically, that 2,700 level, well, that's the continuation point for the whole market, but I really wouldn't want to see that below 27. And what it seems like is developing quite quickly, much like a lot of these other ones, is maybe some kind of minimum 618. We have an ABCD like that, and your 618 level off this last swing. I think I mentioned that about 3,500, 3,450. But the larger structure that is shaping up again, and we've seen this across the board. Bitcoin did it. A lot of the altcoins did it, where they came back to the September 886. And that's not where you want to see this thing. I keep saying the stock to flow is broken down. And I don't see any other price models. I don't see any other measurement methodologies that anyone is putting out there that would account for what's occurring at the moment. You're at a point where people are looking to the moon and this thing is digging a grave. So, caution. I'll show one more that I posted. This is one I screwed around with and waited on, took a couple shots. I took another shot on it yesterday, came back into that zone, and I sat on it, and it's this storage. And I think this is, really just showing us what garbage this is. Okay, that's the daily storage. Massive move. Do a 50% correction and then give you pretty nice pattern. The 4 hour that I've been looking at, go to the 4 hour here. Bat, beautiful bat pattern, automatically generated, great. And I'll bring up the Twitter feed in a second, but each time I think, a very good cause to take action on these structures. There's your terminal bar. You come back, you retest with confirmation. But you never even get up to target 2. I mean, it's not even close. Straight up, straight little bounce reaction, and then roll over. And I said this last week. Once I saw HSI there, I said, okay, let's consider this a dud for now. And that was really where I'm thinking, okay, we'll come back again for a terminal bar retest, which is what happened. Here is the, actually, if you want to go to my Twitter feed, please check that out at Harmonic Trader. And, it's probably one of the cleanest patterns I've seen across the 4 hour time frames. We've been looking at these and just not continuing to give us that follow through. So there was yesterday's post, and then this morning I'm kind of like, what now what? And I did take this. I'm still long this. I don't know. I think I got like 10,000 of these. So I'm down. It bothers me that I'm down 5%, but that's crypto. I mean, it's not really. I'm looking for the longer term move up to really target 1, which puts us at 229. So we'll wait and see. If we don't get out of here and we can't do anything constructively to basically get off this floor, I'll scratch it. I'll maybe cut my position in half or something. But these are taking time, and actually what we're seeing in a lot of these reminds me of more of July, when we came down hard and then had to do a retest or a third retest. The other thing I mentioned yesterday was just the unusual fact that summer solstice, the fall solstice, June 21, September 21, and now coming up on December 21st, we made some important inflections. And although they required more time from a cycle perspective, all right, it did happen, and it was pretty clean. And then the move for Bitcoin was actually 30 days exactly after the summer solstice, June 21st. Not that I want to bring any kind of astrology or anything. It's more of just a cycle of what people are observing, talking about. Sure. Bitcoin, really quick. Again, let's come back here. It's just sitting at 47,000 with the only thing here, some HSI that's not even, it's trying to get out. There it is on your 4-hour time frame on Binance versus Tether, USDC, and the rest are pretty much in the same position. They've come down. They're retesting massive oversold. You have to pivot out, folks. You have to pivot out now, or we are going to have, I feel, a much lower flush. I like the fact that we have an HSI on the daily. Look, this is for Bitcoin, and we need to see progress in Bitcoin if you're going to see progress in the space. Okay, you're sitting right back on the retest, 47K. So that's absolutely, part of what I'm looking at now, not liking. I'm not liking it. It really is. It's just not. It's not materializing, folks. Not the way that we thought it would and should. So absolutely, we got to go into kind of mission critical here and make a call. I'm going to be making a call on Bitcoin really soon. And that would be it. And then I would just step aside if this is not going to give us any kind of development. Although, there's a few things here that are interesting, enticing. Um, I I added some Bitcoin on this last dip. I'm not going to be looking at adding anything else until I see something more constructive. If we see this thing break down, then I would write it off entirely. Because, as I said before, when I was having these concerns a week, 2 weeks ago, basically the crab scenario, folks, and this is really important for all of them, all of your just how you look at the crypto market and crypto space and how this trend is developing and going into the next year. All right, this was our Bitcoin assumption for quite some time. Even when we were at the C point, we were tracing this type of formation out of just being a regular crab pattern, 89, 90,000. But as we trace this out, we can no longer call this a crab by definition once that C point's violated. Now, I want to bring up something quickly from volume 1 that is really where the crab comes from. Its crab structure is just, it's probably, I feel, the strongest of all the M and W formations because of the metrics that are inside the crab. I mean, we have B point at a 618. We have a 1618 XA. Our ABCD conditions are usually aligned with a 1618. Alternate ABCD 1618. And let me bring up. So here's over on the basic members page. Really quick for those that are new. This is the place to get all of your information and get started. Get started with your software, get the books, study the webinars, and then jump over and join our crew on Discord. Big shout out to the folks that are on Discord. Thanks. Great exchange of information. I like the way it's developing. Encourage everybody to be there. Come there. And, you know, look, if you guys want a book, let's do it this way. So, for today, if you want a book, you have to go to hit me up on Discord. And I'm going to have to qualify this because I already got 2 books returned from the Black Friday that I tried to ship internationally. Not a good sign. So I'm going to qualify this. Say if you're in the Far East, okay, even Australia now, I got to stop because I got one of the books was from Australia. I'm not getting books shipped internationally. But if you're in the United States, Canada, Mexico, maybe some Europe because the other book that was European didn't get there. Go to Discord, message me on Discord with your address, and I'll send you a book. And that deal lasts for 24 hours. You get a volume 3. Can't get a volume 1, Claire. The volume 1's available on Amazon. So let's but that's my shout out to everyone. That's the giveaway. So hit me up on a direct message on the Discord, which you become a basic member and access the link through the basic members page. Now I'm really directing everyone to these resources because it explains how to make the interpretations, how to understand where we are within the whole framework of these formations. So volume 1, folks, let me just go over, really show you this. Volume 1 was actually my second book that I self-published, released in 2004. And this was kind of an update of really bringing together from the things from the Harmonic Trader, which was really more like an introductory kind of journal type trading journal. It really was my trading journal. The Harmonic Trader was my trading journal from the 90s, turned into a book. Now, crab pattern, let's look at I'm going to just pull up the illustration here in a second. Looks like this. That's a deep crab. Let's get to the bullish crab. There's the bearish crab. And bullish crab, page 127. Now, this is the thing about the crab pattern that's so important. The character of the structure. It's kind of like the shark. We want to see not only this extended CD leg complete and pivot out with the proper metrics, the B point, between a 382 and a 618. Normally, we're going to see it around a 618. And then you get this extended structure. I mean, this is old. This is going back 20 years ago. These are charts actually from Harmonic Analyzer. Okay, and Harmonic Analyzer we released that in 2000. Shows many of the same. We took those identification parameters and put them into HPC and improved it. But you see the character of not only the structure, but how reversals should come out of that zone once they hit that level. Also, the thing about the crab pattern, okay, is the 618 area. That triggers the 1618 reciprocal XA leg. So take a look. Again, much like we see the bat versus the Gartley, when we have a crab pattern, if that's at a 618, we're going to favor the 1618 extension. If it was at an 886 and it was a deep crab, we would be looking at that lower. And the deep crab, again, is it's a fantastic variation, but it also helps. There's the deep crab. Now, the deep crab uses the 1618, but we know that overshoots. Those differences help us to distinguish exactly where the structure will end up. How far will it go down, and it, not only that, but at what point do we expect a failure? I mean, there's a crab pattern. Such an old chart. It's almost 20 years old. Same type of deal here. with a quick immediate test of the PRZ and a quick reaction. Now, I'll get to why that's important. Because we had a crab on the 4-hour time frame for Bitcoin. There you go. There it is. And that's versus USDC. But this does not have the same character. If anything, it's just kind of sideways roll down. And look, there's the last HSI is bearish in a bullish zone. One go from bearish, there's a bullish HSI, and you can see it. What are the reactions of HSI? We're getting accelerated, a much deeper follow through on our bearish HSI, and this confirmation is, pretty sloppy, but what you would want to see on a secondary test, no follow through. This is the thing that concerns me, is we are more than 30 bars. Go to the side. Right there, and we're back. We're now what, 47, 46.9. Not constructive. I absolutely feel like once we break this structure, you have to step aside, and there really been it's challenging to say the least, because it's been a heck of a run. But when we, all these guys say, when in doubt, zoom out. So let's zoom out. I entitled today's presentation Harmonic Holes, because the patterns create holes in the charts. That's the way to think about it. The same way that we run the gap and we do kind of BAM magnet moves. For example, once you have your X, A, B, C points established and you start to return back above the B point to actually validate your W formation. All right, once you bust through there, bust through your B point, you typically see an acceleration to the reciprocal. So you're at a 618, expect a 1618 rally, breakout, bust through. Especially when the Gartley metrics, and that's a question I get frequently, like if you have I have a lot of people that ask me, Scott, if you have a B point in the Gartley and a B point in Crab, how do you know the difference? Well, a lot of it has to do with your ABCD makeup. We know that the Gartley is at a 786, but if your C point never gets down low enough to establish the proper ABCD, you have a different character. It should be like this. This is your ABCD. Looks like that. And it would be something like that, really tight against the 786. More so with the Crab, if it's going to violate that, break out, which this B point actually was at a 66%. I know that B point, the true B point, really is, if I set it and adjust it exactly, which it does matter. All right, we're looking more, this is more like, it's actually slightly above the tolerance that we want to see for the B point. B point really should be exact at the 618, plus minus 3%. So if you are over 65% or you're under 58%, you're probably not a Gartley. Probably a bat or crab. So now we're violating the integrity of this pattern, and it's all over under the C point. And that really, for Bitcoin, to break that down, you're at the point here where, okay, you could come back, theoretically test the C point one more time without violating it, but that's not consistent with how we see crab patterns truly develop. They're aggressive patterns, folks, especially in that CD leg. And so the expectation is for, no pullback. Once you clear above that B point, you should continue. And we look at the other indicators. We have two HSI signals. We have amplified that are both oversold, and it's doing nothing. And that is also part of the character when we see these dud moves. Dud meaning you get a slight movement off the level and then just does what I call a harmonic pause sideways. You have to start then questioning, okay, is this really going to hold? Are we going to just kind of grind like we did back in July and then find a trigger? Because that's the secondary trigger that we should see. Do we come all the way back to the 886? That was at basically 42.5 to have a retest. This is not really consistent with that either. Okay, that's not, because we did not even have that much of a reaction on the first move. If this had gone to 56, come up to 56, hit the 5.0, and then come back down, we might be in a different situation. So I'm absolutely, I said this last week that I would be vigilant beyond belief, maybe even just saying, hey, let's ride out the rest of the year on the sides. It's not a bad thought. There are some times I think that come with the markets where you have to do this. You have to recognize this. And so I'll give it another week, 2 weeks. Let's see what we do here. Let's see what total crypto market cap looks like. I'll pop that up because I think that is kind of helps to round out the progress of the other coins like Ethereum and Solana and those that have actually truly contributed to market cap, because Bitcoin has not contributed to market cap. It's been more like of the likes of the Solanas and the Dots and those. So that's what I really want everyone to realize. And again, there's going to be plenty of time to respond, to react. I think you see the confusion already in the space. People are a bit antsy, and I feel like they're just the lack of continuation at a point where they're all expecting it to moon is becoming an increasing problem. And that could create what I feel could end up being some kind of sharp correction if it does not do something off of this level. We have, last two HSI are green arrows. Okay, right there. Dud, goes sideways. We have a second arrow just in the last couple days. Is total crypto market cap, where off of, let's just trace it out, off this prior low. From there, going back, you see that there's a consistent theme that we could actually trace out a bat pattern. Total crypto market cap. 886 is, right back to what, 195. But we need to see some stabilization and not this consistent day-over-day lower highs, lower lows, folks. That's not what you want to see. I mean, even if you have a big surge up on the first move, you're usually going to have something come back, give you a retest, and it give you constructive signs of development. That's what happened back in July. So my final point in all this is that I'm want everyone to consider, and I said this last week, where were we a year ago? Where were these coins just 1 year ago? It's extremely important to understand that the kind of gains that were realized in these coins, where they were talking about pennies, and they go to dollars, and then they come off in this regard. And Cardano, I think, is the poster child for this crypto issue. big surge markup that doesn't even take 4 weeks. 94 to $3. That's a triple. And that was a month. That's a speculative move, folks. And you come back just of that move on a full reset. If you don't know what full reset is a full minimum 88.6% retracement of your measured move. That's essentially what has happened. You have erased those summer gains, and you don't even get a 382 reaction off of that. Can you not get to 187 off of 125? Now Cardano has been real sleeper. And folks, I held a whole bunch of Cardano and cleared out of that up at the high twos. And why? Because I went through a couple of these early stages. I caught that move, okay, on Cardano, but then got just annihilated on that flush back down and did not get out fast enough. This has been my one mistake that in the crypto space that I have not been responsive enough. In a lot of the big moves that I have participated in, I have not been responsive enough in my management and riding to the targets. It's easy to kind of see other coins just continue and trend, but overall, I mean, I'm real happy with this year. But when I look back at some of the mistakes and improvements I could make, not being as responsive as I need at the levels, especially when we get crazy surges like this. That crazy surge, a few of the runs Cardano this year were just that. Were just extreme short-term markups. I'm not going to say manipulation, but let's say one-way participation that can't be sustained. And so we extrapolate that out to a larger long-term basis of how does this look relative to the last 2 or 3 years? Well, you tell me, folks. And if we just put simple extension moves, right? 314, 2618, 3618. Where are we? All-time move. Actually, let me get you a better data feed. Sorry. That was it. Think of it this way. If that's one whole move itself, let's call it a 1902, then our maximum pullback move should be a 618, right? If that's a target 2. Let's just say that's a pattern. It's a target 2. Then that's probably the function. That's probably the reaction that's happening. That's 107. You got even some minimum measurements that are pointing us lower. Maybe you come back. I don't think so. I don't have any signals. I talked about this on Friday or Thursday, folks, of I really feel it's going to take the generation of some automatic patterns, say on the daily. Can I have a bat structure here? No, because it doesn't really fit well within our M and W formations. It's an issue. It's Cardano, and I mentioned this a couple weeks ago. This was one, like the canary in the coal mine for me, folks, was this OMG. So layer 2, there you go. OMG was one that was a high flyer. Okay, bottomed at 4, went to 20, now back to 580. And the thing that they did was some kind of airdrop. I don't know the exact details, but it wasn't really good for market participants. Basically, hey, we're going to flip out your current holding for something else that we're going to airdrop on your head. And so if you're chasing this thing thinking it's the next best thing and then it comes and does a full reset, well, that's the problem with the space, and that's the problem on any asset that's run up thousands of percent in a short period of time. That's what, OMG has done in the last 18 months. There you go. OMG down here was 22 cents. It went to $20. It's almost 100x high to low. And even on the last move down here, yeah, from 3 to 20, right? 7x. And that's from June, 700%. And I mentioned this, even if you're bearish on this, which, there's not much here except for this shark pattern, that I would be looking for this. I wouldn't even look at it an OMG until 480. But when we get patterns that materialize, okay, they show us where to be projecting those targets. Bitcoin is about to show us whether or not it's going to do this kind of pullback. Is Bitcoin going to retrace to the 886 of the May of its May low, which wouldn't be too much? So I feel like this warm fuzzy holiday environment that we were supposed to enjoy and really come through is no longer warm and fuzzy. In fact, it might feel like sandpaper pretty soon. And I don't want to be ground down. And I say that as NASDAQ's going to new lows of the day, now down 190. Tomorrow with Mitch, we're going to get into the bigger reasons and bigger developments that we need to consider for all markets. What are we doing here? We're going to talk a little bit tomorrow about some of the inflation. We're going to talk about some of the obvious issues facing everybody. All right, what do you do in this environment? It's not healthy for stocks at all to see 7% inflation month over month, or 6.8 or whatever. We haven't had that since the 80s. And what happened and how that had to get adjusted was a massive bear market. 82 bear market was vicious. And they were going to see it in the interest rates. But for now, I just think it's going to spell a lot of volatility where you get days like today. We're down 200. Last Thursday, we were up 470. And then, you're getting these triple digit days over and over and over again that you should expect. I mean, that's really what I hope to get out of my discussion with Mitch tomorrow. Get his insights and how he's feeling on, what he's reading in the markets, the longer term stuff. He does great work on longer term time frames, and we're going to kick it around. I'm always talking harmonic patterns, and most of you know my framework, my type 1, my type 2. I know all the technical methods, but I really want to keep this discussion with harmonic patterns. Tomorrow will be a broader technical discussion. So we will get that really start hard and fast at 11 o'clock tomorrow. Normally I'm a little bit slacking a little after 11 a.m. But that's what absolutely we're going to do. And, Mitch and I are talking, really have been I've been really appreciative of my relationship with him because not only has he kind of helped me to see how his community reacts, responds, and is learning and progressing, which has been great, but I like to bounce ideas off of a guy like Mitch and his community because they are purely technically oriented. And I feel, and this was what I was speaking with Mitch actually yesterday over the weekend, just saying, this is so important to the crypto space and to new traders to be able to understand technical analysis and measurement strategies so that we can avoid the catastrophe. How many people think we're going to do an 88.6% correction? It seems like a lot of people feel like, yeah, hey, if crypto corrected 80%, it's almost like no big deal. And I don't trade like that. I don't want to be in that position of being complacent and saying, "Oh, well, if Bitcoin falls apart here and takes out its C point, and we no longer have the whole crab scenario, well, I'll just wait." No, it's not going to work. I have way too much money allocated to this space to sit on here. Someone's asking, what's the stop on storage? Probably another 10 cents. But I'm going to probably let that ride a little bit longer. Again, really critical here, but we do have some nice confirmation triggers that should give us at least some kind of reaction off of these lows. But if not, I am prepared and essentially breaking down this not much further from where we are, folks. I'm not saying enter a trade at the moment, but I'm certainly saying you're in an ideal area where we should get a response. We should get at least that reaction off of the zone. Get me back above 50,000. No. And I don't see that. I mean, we're in a hole, folks. That's kind of the title for today. We're in a harmonic hole. We're in a hole of framework wise where if we lose any more integrity of these structures, we violate the key pivot points, you're going to have to then rethink it all. I just don't feel like it's not something that has been coming together in the last few weeks, and it's actually quite the opposite. It's fallen apart to the point where I've been concerned, and we'll have plenty of time to react. And again, the longer term, I don't want to talk about the longer term possibilities. I entertained them this summer of the what if we break down da da da. I mean, the 88.6% retracement on Bitcoin all time. I'm not saying this is what's going to happen. I'm just saying the back of everyone's mind. There it is. I have it up. It's 11.8. Is that what's going to happen? No, but we're going to know. We'll have plenty of time to react because we take out this pivot, this prior pivot. Yeah, that would probably then cinch it all up to at least go back to an 886 off of the July low at 32. If not, that's your bear scenario, folks. And I would say that, hey, this bull run, okay, you go from 4,000, 5,000 to 65,000. That's a heck of a bull run. 1,200% or more, 1,500%. I mean, it's you eventually have to correct that cycle. How about 50% off all percent were minted in 2021 alone? Yeah. Again, that's a great comment and I appreciate that. Yeah. 50% of all the crypto participants were just started this year. So this is just neophyte city. And that's why I think you're not going to give us construction, you're not going to give us trend continuation, then it's time to really prepare for something different. Now for something completely different. And that's my concern. All of these S coins, they can go back to 5 cents, 2 cents, it doesn't matter. So we're going to stay on top of that. We will dig deep tomorrow. So come back 11 o'clock. Get with Harmonic Pattern Collection, folks. I don't need to tell you that, but I'm going to say it. Harmonic Pattern Collection is changing lives, and that's all I'm going to say about that. And it's we believe in it so much that we are giving free trials to everybody on every platform. Every platform except for Thinkorswim, but maybe we can change that soon. But for now, get on the basic members page, try the MetaTrader, ESignal, Ninja. You can try all this software and then dig through it. But tomorrow we'll do a marathon, and maybe we'll have a lot more to talk about as Bitcoin now dipping under 47,000 again. So come back 11 o'clock tomorrow morning, folks, 11 a.m. Eastern. And if you want your book, you know how to get it, and that's good for 24 hours. I need your mail address and connect with me on Discord. Until then, folks, see you tomorrow. Have a great one and go get them.